Hey, hello everyone. This is the professor from Day Trading for Success. I am the head trader here. Today we're going to be going over the strategy that we traded today and that we've been trading every day this month to try to make a minimum of $100 and then more, obviously, in 30 minutes to 45 minutes every single day. I stream live at Day Trading for Success 8143 if you're looking for the exact channel, but I think if you just type in Day Trading for Success, it should come up, or just obviously subscribe right now. You can get alerts, and then every morning when the market opens, actually before that, I go over the stocks, figure out what the picks are, talk about stocks for different strategies, and then I trade every day. So we're going to go over exactly how I'm able to accomplish green 92% of the time and get hopefully people go along with me as a quarterback. How do I do that? What do I use to trade? How do I decide to go in and go out? So we're going to go over that a bit today by showing today's trades that just happened, but going over the strategies that I use too. So stick around. This should be interesting.
Welcome to Day Trading for Success, where the professor, a former math teacher turned full-time trader and coder, guides beginners on how to trade for a living using proven strategies, breakthrough indicators, and lessons from essential trading books. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
Hey, so welcome back, everybody. What you're looking at here is a 1-minute chart. I know it looks busy. What it has on here are custom indicators that are used by prop firms that we use here on this channel to help people decide when to go in and go out. So these are indicators that are very, very highly rated. These are the indicators that the pros use. We're going to go over what these are very briefly, and then we're going to go over how we're doing for this month every day with this one goal in mind of making at least $100 a day. And then we're going to talk about the strategy itself and why it's so successful. It's a large cap retracement strategy. But let's talk about the indicators first. The most important indicators that we look at are all on this 1-minute chart. I do have some on a day chart that we use, and I do have some on a 5-minute chart that we use as well, and we'll take a quick look at those too. But right now, the most important ones are right here. So how do you decide to go in a trade? Well, there's about 5 different indicators you can. Now, we're going to talk about the strategy and how it says to go in, support or resistance levels, obviously, but we're going to talk about the indicators that make it so simple to decide, if that's such a word I can use in day trading. But they really help you get that edge. So you're looking to get more things lined up that say, take this trade, whether it be long or short, more things that are lined up on how you do it. And in this strategy, retracement strategy, we do basically large cap retracement. So we're looking for the stock to go one way, and then we would trade it on the retracement. And then, like if it was going up long, then we would take a short, and then as it hits a support level, then we go long. So it can go either way. You don't have to trade short. You can just do the long trades, and we'll talk about that too. Well, let's get a deeper dive into these actual indicators right now. So if any of you have watched any trading or know a little bit about it, you know that Thinkorswim, which is this platform right here, it has a lot of indicators that are free. Hundreds and hundreds and hundreds, and they're totally adequate. But when you get to be a professional, custom coders are the key to you to getting really that next level up indicators. So one of the things that I do is I do coding for prop firms and other companies, and I try to find ways that these codes can also be available to you, to an average trader. And that's what this layout has, and I have links to go get each and every one of these indicators if you so desire. Let's talk about some of the most important ones. So the first thing you need to know is, when should you go into a trade, right? Now this one's called the ScalpMeter Pro, and inside these blue columns, it tells you where the buyers are and where the sellers are any given moment. So you can see inside a 1-minute candlestick. This is on a 1-minute chart. See these candlesticks here? You can see the strength. See how strong the sellers are on that? Right there, they're right at the top. So the blue column represents the volume, and the red represents the sellers, and the green represents the buyers. And then this meter is going to show you another way. How strong is it right now? So it's moving right now. Okay, so you can see it moving right now with this candlestick action. It's also going to tell you a couple other things. It's going to tell you the volume of the last candlestick, and then it's going to tell you if the current volume passes it while the action is going a certain way, you know it's a lot stronger. Get ready to jump on in that direction. Also gives you the overall volume for the day, 51 million so far for NVIDIA. And then it has another, and then the percentage, besides the meter, it's showing the percentage right now. It's buyer strong. You can see it's going up. I'll tell you what that arrow is in a minute that's telling you caution, caution. But I mean, these are the indicators that help you. And they're going to give different messages. So the more you use them in a simulator or maybe just trading with one share and practice, the more you use them, the more you're going to be able to instantly respond to what they do. You see, this is actually the MACD, which is basically telling you that to go the other way. This is a really, really handy. So you had a short move up on this one, and then it said, watch out, get out, and then it called it perfectly, right? And then you saw this jump up with it. Now it's saying down really strong. So you have a downward move and nothing stopping that right now. So it's just a matter of reading these. Now they're not right all the time. Nothing's right all the time. And it's basically telling you something that has just happened. It's not telling you the future. But trading with the crowd, trading momentum, I often antiquate this particular indicator to you're sitting on a surfboard and you're waiting for the wave. And then as you see it come, you jump on. So the wave's already happening. You're just trying to catch it. All these noises you hear are different alarms of when these indicators are triggering. Now, I actually have the alarms for the different indicators sort of silenced. There's a few of them that go off, but most of them are silenced because when I'm live streaming every morning, the streamers, the people trading with me, don't want to hear all my alarms. They have their own alarms, and it just confuses them. So I have a few that I really need myself to trade, so I don't turn those off. But most of them I can just see by looking at the arrows and determine the action. But back to this. So this is the engine that drives your entry. So you're looking at that, and that's the first thing you're going to want to look at until we get into strategy, which I'm going to tell you a little bit about what we trade here for strategy. But this is the first thing you're going to want to look at. And then you're going to want to make sure nothing's conflicting with it. And then the other thing you're going to want to do, like just say this is going short. You're going to want to see if did it hit a resistance level as it was going up, and that's why it turned around. So you're looking for support and resistance levels too. But as an indicator goes, this is basically the best indicator I believe is out there. If you're a scalper, if you're a short-term scalper, this will work on a 1 and 5 minute chart or a 2 minute chart. Anything below a 5 minute chart, I highly recommend using it on a 1 minute chart. That's what it was designed for, right? Now this is a fairly recent one, and it's sort of like a training wheels indicator, but it's used by professionals, particularly to train people when to get out of a trade. Say you got in on this trade, you would look at this target up here. How far should I ride that trade in this direction? As you can see, this is very thickly traded right now, this time of day. It's not really moving very much. It's just moving a few cents. And how does it determine what that is? Well, it takes the movement of the last 9 candles, in which way they were stronger and how many pennies it went for stronger, right? And then it'll give you the target in pennies, and when you enter the trade, this just darkened out, but this will light up and it tells you how many pennies you've already moved. So right there will tell you like how close are you to 3 cents. Typically when you're trading, you want this to be 10 cents, 12 cents, 20 cents, 40 cents, higher numbers here. Right now, you wouldn't really probably want to trade this stock because it's going very slow. But I brought this stock up to show you the strategy itself, which we'll get into. So, and then it's going to keep an eye at your total P&L. So these two together work so well. And over at the $1 Million Margin Club, I think they have a package where they have the two of them together. I have a link to it if you're only going to get two. But, really, if you were to purchase these, you would probably get your money back in a couple of days. They're not expensive. They're $24.95 over there. It helps support the channel. I am their brand ambassador and the only ones that really sponsor me. And I only really push stuff I believe in, and these I truly believe in. Let's get another look at a little deeper into here. So I open up, this shows all the studies that are on the chart. So these are things you would typically put on on a normal thinkorswim studies chart, you're going to want your EMAs on here, the moving average that's been smoothed. And this has the 9, the 14, and the 20. And then the SMAs, meaning this is how they move on a day chart. They'll be on a 1-minute chart, but it's going to show you where they are if you come across them. They're pretty important. That's the 50 average, the 100 average, and the 200 daily average. And then the other thing you have on this chart is the VWAP, the volume weighted price action. You want that. That's typically considered to be the value of the stock at any given moment. Although when it comes to scalping, that's not that big a deal. You don't really want to pay too much attention to that. And then we have the ATR multiple range. I'll go into that a little bit deeper in a minute. You have the multi-time alignment. I'll talk about that. The risk oscillator we just talked about. The MACD I briefly pointed to you. And how does the MACD work, right? That's an EMA crossover, convergence, divergence, and that's the 9, the 20, and the 6 that it takes to decide whether you should go up or down. I find this to be, I really respect this when it kicks off, and it has an alarm that says, hey, go this way. And that's really important for traders. And then you have the market magnet, which we'll talk about in more depth. And then we have the buy-sell oscillator, which is based on overbought and oversold, RSI, relative strength. And then the whole and half dollar, which basically marks every whole and half dollar, these gray lines, for any chart. Now, you can draw them yourself, but this just makes it really easy, and it's wicked cheap, and they're just ready and set up for you. And you might ask, why would you do that? Because that's where the crowd trades. They trade a lot on whole dollars and half dollars, so knowing those levels is so important. Then we go to the lower bar down here. We have the Scalp Pro meter. So that's what's on this chart right now. Now, let's look at this ATR for just a minute. It's going to get crowded here because I'm going to jump off this chart, and I'm going to open up this day chart down here. Now, this day chart has the ATR levels. What does that mean? Well, what that means briefly is that, and I'm not giving you an entire tutorial here, but I'm going to go over pretty quickly here. You're looking at the average true range down here of what would be the average price this stock would move every day over a 14-day period. Like, what's the average it moves in a day when you smooth out 14 days? So if I go over this candlestick, say right here, it says the average is $3.99. See when I go over? So just call it $4. Now, there's two ways you can mark the ATR. You can mark half of that, high and low, or you could mark the entire $4 up or down from where it last closed. Some people do it from where it opens. I do it from when it closed. That's when most of the people do the previous day, is showing you what was that average smoothed completely in. If you're going to the day that you're trading, it's not done yet. So it just confuses the algorithm that's figured out. So this is a really good indicator. You can put it up here to see the prices, right? And then you can draw them and mark them if you want. But it gives you the overall, what you're looking for here. But then this is the one with the labels, and they're just these little red and green lines, right? And then this is one, by the way, that's free over at the $1 Million Margin Club. You should pick that up. That's pretty cool. This shows you what the volume is per 1-minute candle over a 10-day average or a 1-day average. And when you're trading this particular strategy, which is a large cap retracement based on the RV strategy, and that you should look that up. That's Day Trading Volume 1, the RV strategy. I have a link to that book. That's the book that started all this stuff. And if you haven't read it yet, you need to have it on your desk, because that's where pro traders are born. So read that book. But anyway, I have a link to that. But this is one of the ones that I made sure they kept for free for you. So if you go over there, you should get that. But so this is something that is on this 1-minute chart over here. And it's just marked by lines because I didn't want the labels to be up here. So the solid thick line is the half level. That's the half level high. And then as you go down here, there's the half level low. And then the full ATR is that dotted line there. That's the low, and that's the high right there, right? So that's the full ATR. These partial ones that don't come out all the way, those are part of the market magnet. And since you see that right here now, that's this purple line, these little blue, light blue stripes above and below it, and these green and red arrows. And now there are videos over at the $1 Million Margin Club that shows every one of these in detailed action and how they're supposed to work and the mathematical formula that is being used. You don't need to know all that stuff, though. You just need to know how to read it if it's on your chart. Like, what does that arrow mean? Go the other way, or it's telling you maybe go the other way if you get enough cumulative data that says it's time to get out of the stock. It's telling me that it's done, the move's done. So you use the risk oscillator first, and then you can look at other indicators to help you. And the market magnet is ideal for entering and exiting. This is obviously everything's prior data that just happened. This always needs to be set under my picture, set for today, not one day. Your chart should be set for today. So if you go under your settings here, they have the time frame here, and it's on today. A lot of people put it on one day thinking it's the same. It is not the same. So one day, make sure I've got the right camera on me here. Yeah. So this is set for one day, and it's going to tell you what 50% of the volume has been moving. That's the high of it, and this is the low of it. 50% of since the market opened, that's where it makes its own little channel. And channel trading is so important, right? So we'll get into a recap in just a minute, but of what happened today. But I wanted to go over the basics so you can get an idea of how you might be able to trade along with me every morning. So then this is the center, and it's called the magnet for a reason. This is where the most volume has happened to this date and time right here. So it always tends to gravitate back to that, and that's why it's called the magnet. And then these blue stripes will signal as they shoot across a volume that's just happened. That might signal that it's about to pop up toward the blue stripe that's coming in. So you always want to watch that. I announce it all the time when I'm trading, like, hey, this thing's about to pop. Look at it shoot in. That means it's like a springboard, like the price goes up with it. So you can kind of see. And you tell me if you think something like that would be useful to you. So it's just like, they're just a no-brainer that $24.95, you might want to get this indicator. Obviously nothing works all the time, right? But this is a very accurate one. And then some of the others, I talked about the MACD, which basically is a crossover of your EMAs. So on the gray line, it's a 9 EMA. The purplish pink line is a 14-minute, and this is a 20-minute EMA. And then here's your VWAP down here. A lot of people only take trades long above the VWAP, low above the VWAP. That's a strategy. Doesn't work all the time. I think it's like putting darts, and just throwing darts at a board. But it's good to see where that is to put it with the rest of the data, right? It might be a support level as this comes down. So you look at the other data, right? But, look at how accurate the MACD is. It says it's going to go down. It went down. This is a buy-sell oscillator. The MACD is only the white arrows, okay? So MACD says it's going up or continuing. It's going up. Let's see if we can find a wrong MACD. MACD says it's going up. MACD says it's going down. MACD says it's going down. MACD says it's going up. This one's wrong. Well, it's not really because it went up. Yeah, it's just a red candle, but MACD. So MACD arrows, that indicator, highly respected. In the moment, it's going to feel different than me just going back and cherry picking an arrow, obviously. So it'll flash in and flash out. So again, you're looking at, is that saying it's going to turn around? So you got to take a beat and look at your data and use a little bit of your cumulative brain power about what you've been learning and watching. Once you kind of get that edge, the MACD is extremely helpful. The buy-sell oscillator is based on whether a stock is overbought or oversold. I found that when I read that, I think about it maybe taking another minute or two to actually activate. I typically do not use that to take a trade going the direction I want to take. I typically use it to get out of a direction. So if I get out a little soon, at least, if I'm green, I'd rather get out a little soon and be safe. So you will see like this arrow might pop up here, and then the price action is so strong, it just pushes it. But it's warning you like, look, it's overbought. Not many people are up. The oxygen's thin up here. So you want to look at that buy-sell oscillator as a message to like, this move could end at any minute. Get ready. And indeed it did. It pushed it up, but it turned it down, and it went down. And then even here, you see it turned it down. It went down. And then, now if you get both of these saying MACD and the buy-sell oscillator. But see here too, it's like it turned around, and at first you see it and it's like, hey, it's not really turning around, but then look what happened. So my advice on that indicator is wait 30 seconds, wait a minute, maybe even 2 minutes if you're getting in a trade with it. But if you're getting out with a trade, just take your profit right then. Don't get greedy. But again, another magnificent indicator that really helps. Now let's talk about these vertical lines you see that look so busy coming up here, 5 minute, 15 minute, 5. Okay, so this is the multi-time alignment. These are set at 5 minute increments. It's important to look at this on two different charts. This normally has labels up here. I took them off because it gets too busy. So what did I do with those labels? I put them over here. And what do these labels do? A lot of people don't trade on a 1 minute chart, right? They trade on a 5 minute chart or a 15 minute, 30 minute, 1 hour, 4 hour. In fact, data shows that more people trade on longer time increments. What are they looking for before they get in and out of the trade? They're going to look at the candlestick price action where it has abruptly stopped or turned around, or where it's continuing. It's continuing the way they want to go. So if they want to go short on a 1 hour, meaning bet that the stock's going to go down, they're going to most likely go in down, right? They're going to go in down. So knowing what's about to be added, what's about to affect the price on the level 2, everything you see on the candlestick, what might make that price go a direction, other people trading at different time increments might, pretty good idea that they're going to make the stock go that way. They have a strong bias that it's going to go. See how it's going down with these? It's a strong bias that that's going to happen. Now, it's sort of a reset. Like every 5 minutes, you want to recalc. Like, how strong is how many? There's 3 5 minute traders here on the 15 plus the 15 minute. Then you go over here and you got 4 1 hours and 6 30 minute people and so on. That's a big one. That's probably going to go up if it got to here and it was still green. This will change color depending on if it is still green. So it's telling you right here the color. But if you're used to looking at it over here, this is a quick read. But this also tells you what color they are. This is just going to tell you really quick. So I split it up. When you get the indicator, they give you all the versions, and you can bring them into different charts. Again, every 5 minutes, which is how this all started when I traded, I said, hey, look at the 5 minute on your grid. No special indicator, just your grid on your chart. When it gets to 5 minute, if the 5 minute is showing it green going up, probably people are going to keep going up with it. Showing red, probably they're going to go down. So get out if you're trading long. So that's how it all started. And then you realize that the longer time frames became just as helpful. So that's an incredible indicator. As we're over here, I'll just briefly talk about a couple of. This is the ADX, which is going to tell you whether there's a trend up or down. This is the market pulse that tells you what the whole market's doing. Well, the main indicators like the QQQ, the SPY, the TLT, and the UVXY, the fear indicator, bonds, and then the SPY and the QQQ. So those are both ETFs that people will watch. And that's telling you, hey, look, the market's going down right now. Now you combine that with that. Then you look at your price action. And then you look at a catalyst to see, hey, has there been recent news that's saying this should be going up or down the stock that I'm trading? What's going on? And I have a 15-minute chart here, too, to let me see a little bit bigger action so I don't get caught up in the moment. So you may find this to be very busy. It's something you get used to. You don't have to have all these things open. This is where I take the trades, the active trader, where you can set your share size really quick, or you can just bump a share size here, and then you can change. I have videos that tell you how to set this all up. I have videos that give you free layouts, and then I have videos that give you scanners. I mean, the scanners right now, you would get them at the $1 Million Margin Club, but this is where you're going to find your stocks under scanners, right? Now, these are all specially coded scanners, all right, that you can get for $4.99 that I put in. This one has 5 codes in it, right? This one is ATR equals 10 or greater 4. Yeah, this is the one for the RV strategy right here. So let's look at a couple of others here. So these are some of the ones that I do, the professor. So this is a momentum scanner. This is a gap scanner. That's over there. This is the one that's used on a popular trading platform that only trades momentum. I won't mention his name again, but it's an exact duplicate. He charges money for it, and a lot more than $4.99. You can get that here. The one thing it would be missing it doesn't have an alarm and have him saying, "Hey, I'm going to go over and trade this right now." You'd have to, see it and see that they're kicking off. These are a couple of the others. This is the one I just did, the mid cap one. And then this one that I use on this strategy we trade, and this teaching I think is the one that is, this is the one right here. And this has all the custom coding in it. I scan here. It's only set for 10 stocks. And it's going to pick out larger mega cap stocks that are moving over 100,000 volume every 1 minute and a lot more, as you can see. And that's going to give us the price movement we need to trade this particular strategy. It comes in handy for just about any strategy, though, I will tell you. And if you don't want to just trade the large caps, I did one for just 50,000 above too that isn't set for a large cap, a market cap. That 25 million actually means 25 billion minimum market cap. So watch some of the videos. I go into depth about these. There's all these different really wicked cheap scanners that I've created over at the $1 Million Margin Club, and there's a link for that stuff. So that's pretty much the indicators that I use. Now let's talk about the strategy that we trade every morning, which is so important. Actually, I'll start it with a 5-minute. So every morning I'll start, and after I scan, I'll pick the stocks that I'm going to mark up. And how do I mark them up? Well, I mark them up by historical data. So what we're doing here is just common sense. So many YouTube videos you see will just pull up a picture and say, when it gets down here, you should trade. That's a dip, and go in and go. I mean, that's very cherry picking. You should be able to mark your chart out before the day begins and have your levels all set. If you want to add to those levels, which I recommend, and I'll show you how, as the day goes on, then you can do that. And there's ways to do that based on historical data. But when you start off in the morning, like this high wasn't here in the morning. So the first thing I do is I set a Fibonacci level. So the Fibonacci level, maybe was that pre-market? Yeah, I think we had a pre-market high like right here, or maybe right here, and I set the Fibonacci level high. It just isn't drawn over there. So basically, it's up here, and you can bring it on your chart. You always go left to right. You open it up, you click, like if you open the Fib right here, you would click it, right? And then it drags to where the high is, and then you'd mark the high, right where the high is. Let's remove that drawing so we don't get confused. And what that does is it creates channels based on the oldest historical data that there has been, the 12th century or whatever it is. And this is still used. It's like nature's mathematical formula. Trust me when I tell you, you should respect, for the most part, these levels. It's all probability and outcome. But if you look at something like this that wasn't marked on this level, look at how it stayed in this channel. Look at how it stayed here and pop. Look at how it hit it, respected it, came back, hit it, came down. See what I mean? Fibonacci levels, just common sense. Mark them out. They're not hard to mark out. You just always go from the low to the high or the high to the low, always left to right, and mark it. I do a 5-minute, 10-day chart. That is the most commonly used for day trading Fibonacci levels, not swing trading. They'll go to like a day chart, right? Day trading, you need the levels to be somewhere you're going to trade. Now, remember, this is marked a ways ago. Look at how that's in that channel. What you're trying to do is you're trying to create channels, and then you're trying to go off the floor up or the ceiling down, or if you're just going long, you go off the floor up. That's what the large cap retracement is, and mega cap retracement. You're finding a channel, and then you're trading in that channel. And that all started with Day Trading Volume 1. It's called the RV Strategy, and I highly recommend you reading that book. So right here, I didn't end up trading NVIDIA much today, but I did mark some historical data, and this is an historical data level. And what you do is you just open up a price level, and you find a spot where the price action is stopped and turned around, and you double click, boom, boom, and you've made historical data. And look how it respected it again, and look how it respected it again, right? Now, there was no point if the price action wasn't going to go down this far, and I felt today that price action was only going to go up, and so far I've been correct. Hasn't gone a huge amount up, but it is going up. I think it will close higher than it's open because of the news that the the tariff deal at 15%. So I think the overall market is going to go up today, and NVIDIA is a stock that travels. So these are the travels with the market, or maybe even moves the market. But these are the conversations I have every morning before I start trading. I go over my thought process. Charlie, who works here, she helps with the chat, and she puts together news stories that will affect all the large and mega caps that we might be channel trading with the RV strategies. So I touch on those stories, and then I talk about my logic where I'm marking historical data. So historical data can be 1 minute back, it can be 5 years back, right? If you're trading intraday, day trading, you pretty much don't want to go more than maybe 10 days back. You've already got your SMA dailies on the charts, right? On my 1 minute chart, I have the SMA daily. So that's daily moving average of 50, 100, and 200. So I've kind of got those levels. If they come into play, there's going to be marked. But there's no sense in marking historical data back 6 months if the price action's so far away from it. You'll never see it in the brief amount of time that you're trading, right? So you're looking for something that's in your channel, right? So this is in the stratosphere. The oxygen's thin up here, I like to call it. There's nothing up here. It's not way, way long ago, right? So there's nothing to mark historically. So we're only going to mark below the opening area, right? And then you're thinking, well, if it's long bias, why do I want to waste the time marking stuff down here? Pretty much the Fibonacci levels picked these up anyway, so there was no point. I mean, maybe this one, the black areas are the open sessions. I mean, maybe this one would have been, but look, it picked it up. Yeah, that's just a continuation. So it respected it and respected it and respected it. That is a great historical data level. So you're looking to mark a level that may hit again while you're trading. It's just that simple. You're looking to mark that level. It may not work. As the book says, as many books say, you just respect them until you don't. The second it breaks that continually, just like breaks it, trends right by it, like that level meant nothing. Take it off your screen. It means nothing. It's not a guarantee, right? But a lot of times, I don't want to say most times, a lot of times it is respected. And that extra edge, guys, with the indicators and the skill you develop to see the movement on the level 2, that's the edge you're looking for that's going to get you green every single day for the most part. So historical data marked out. Let's take a look at another one. I'm about to break into how we did today. You can see on this stock was $104. I'll go over those trades. And then if we get to say, I came back, guys, for those of you that watch, and I traded with Charlie. So let's go to AMD. I think AMD, we did $49. So let's look at how stored. Now today was a little more difficult to trade because it was trending up. So I marked a level and it just blew right out. There's nothing to mark up here. So when you see these levels here now, these were intraday. As I was trading, I was trying to find anything not as highly respected. I wasn't going to respect these much, but I put them there for a little bit of guidance while we were trading in the moment. And then the other things you're looking for here, like the candlestick pattern playbook, is the only book still, and I have a link to it, is the best pattern book there is. No matter what you see, it is the best pattern book. Not only does it have depictions of every pattern, drawings of every pattern, it has a rating system. It's the only book that rates the accuracy. It would have told you that this is a tweezer move. And this, I believe it's an 80%, maybe a 72%. Bull flag's an 82%. But this tells you that this is a very accurate pattern when it comes up and it tweezes like that. And it says that when it tweezes like that, you typically want to expect the movement of the inside of the tweezer to go down. So if you take a look at that, 174, like 40, all the way down to 173.66. So a little less than $1 from the time this closed. So this closed the end of the tweezer. Now you should expect this to go down a little bit less than $1, 73.39 down to 72.32. So there it is. It did its exact move before it turned around. And it's doing it again here, right? There's another tweezer move, right? So it told you again, look at this candle, look where it closed. It actually went further. That's just one pattern. That's an inverted hammer. That's a reversal sign. This is a rickshaw man or a doji that's also telling you at the end of that move, it's going to go the other way. So you don't want just support and resistance lines. You don't want just indicators. You want to learn your patterns too. This is the edge, guys. Why the 5% make money, make millions. There are many traders making 20 million a year. That's not just a number I'm throwing out there. That's verified numbers from other trading prop firms. So, but don't expect to make $20 million. But I'm saying, how do they do it? Well, they're reading price action, level 2, which I haven't talked about yet. They're reading historical data. They're reading candlestick patterns. All these things. Now, a lot of them, they'll trade off channels, and some of them don't. Just everybody has their own little shtick that they do. Here's another tweezer move telling you it's going to go up, and it did. Here's a doji or rickshaw man saying, hey, it's going to go back down. It's just like clockwork. You can literally, more times than not, I'll give it that. I won't say always, but I'll say more times than not, you can respect the patterns once you learn them. There's another book that came out after the Candlestick Pattern Playbook, and it's called Day Trading Volume 3, and it's the 66 Candles Mastery or something. It shows an old Japanese guy on the cover. And that one is just puzzles and games that help you learn these patterns. So I don't mention this enough, so I wanted to make sure I brought it up, that the patterns are so important. But when we marked out AMD this morning, it wasn't up here. So I did the same thing. I marked the Fibonacci levels, left to right, high to low, made some channels. I didn't really have much. You can see I marked this level because it hit here, then it hit here, then it hit here, and I thought, hey, at the open, if it just happens to go down, we might want to buy off that dip, right? But it didn't. It just took off. So that one we made money on, but it didn't really give us what we wanted in the channel. They were just taking off. So let's go to Tesla. Now this one I came back in, guys, that were watching. I traded this with Charlie so she could get to her goal. Now this is not one I normally recommend trading, but it actually had a catalyst. So you don't want to trade, if you're trading a large cap retracement, you don't really want to trade on news or a catalyst or earnings or something that might make it go a certain direction. It's great to travel in a certain direction if you know the stock's going to go that way. If you know the stock's going to go that way, then go with it, right? But how do you really know, right? You're always chasing it. If you get green in the beginning, then you can hold it and just say, look, if it goes back, if it retraces this bar, I'm keeping my profit. If it starts to go back, I'm going to get out here. I'm good, right? There's a good book out there by Tom Hogarth called Best Loser Win that talks about, and I have a link to that, it talks about how you just let the winners run, man, until you see data that says stop running with them. And when you use my links, by the way, it really helps me out, so I appreciate it. If you're going to get it anyway, please use my links. But these are books that I truly believe in. Trading in the Zone, Mark Douglas is going to help you deal with the probability and outcome. And he says, there's a whole chapter in there I love where he says, count on 20 trades going against you. If you can live with that, with your share size, you're going to probably make it. He doesn't say those exact words, but he bases the probability and outcome like, it could go that bad for you. You could think you have it all, and in 20 trades go bad for you. Are you still alive? Is your account over? So you got to make sure your share size. I did a great video called Trading with Nerves of Steel. You might want to look that one up. And it talks about share size is what it's all about, man. If you're sweating, if you're shaking, lower your share size down to 1 share until you just don't care and you're just getting the hang of stuff. Then just judge your accuracy. Don't look for money. Trade with 1 share, 5 shares. Just judge your accuracy. When your accuracy gets 60, 70 and up percent, mine's 92% right now. I'm running, I'll show you in just a minute. As it gets better, there's less and less chance you're going to lose money as long as you stick to your max loss. I'm not going to do a whole tutorial, but I'm going deeper than I thought. But here is the fibs on Tesla. They also, they did do some help here. Look at that. Look at that. I didn't even see this happen after I stopped trading. So that was marked high to low in this case, left to right. Bam, like a hard ceiling, it turned around. How would you know that without marking that level? How would you know, like, I should take my profit now? This is all over, right? Now, you could mark some of this historical data if it kept going. Tesla's not the best case study. Look at how that historical data was respected. Look at that. That's marked from prior. I'm just trying to point out there's a lot of people. I always fight back on people that say, oh, historical data is senseless. You don't know what you're doing. Well, they pretty much told me they don't know what they're doing. It's like somebody not using the average true range. You're going to mark that. That's historical data. That's a range of a stock. You're going to want to know how high it typically goes and how low it typically goes. That's historical data. Those are support and resistance levels. It's the same thing here. It's just that you're getting inside like a microscope and you're seeing like, those are the spots, man. So let's look. And if they don't respect it, then get rid of them. And that's what the whole RV strategy is basically based on. It's not the exact strategy I trade every morning, but I use it as a guideline to trade in the morning. So let's see what else I traded today. Did we do? I can't remember if I traded Apple. Okay, one trade on Apple. Again, I think the reason why is because it started to go in a direction. Like I was looking over here at the beginning of the market, and it was just going straight up. So I got out. I guess it did a dip and went up, and I was like, I can't. This is an older data. This is when I was trading it. I think I marked there. And look, you can't respect that level. That was marked on a 1 minute. And that's just useless right now. But at the time, I was looking for something that was moving here, and it was like, it's just going up. I could just ride it long and hope that's what it's going to keep doing, but I don't know when that's going to happen. I guess this historical data told you when it was going to happen, though, didn't it? And look at it here. Again, I have the same argument with nobody. Nobody can argue back with me. It's just because of the comments I get. It's just like, dudes, come on, man. The evidence is so clear every single day. But so that's the strategy. You're looking for channels, right? This is a big channel. Try to get your channels tight down to maybe 25 cents up and down, and then see if you can get into the channels as they move across. See if it works. Now, this is a 5-minute chart. You would be trading those channels on a 1-minute chart, right? So the half and whole dollars are way down here. That's what those are. They're set for a different stock because as Tesla changed, I had to. Actually, I think I changed them back to NVIDIA. But this is what you would see, right? So if you're zooming in on a 1 minute, like if I was going to continue to trade this, right? I don't have historical data here, so I would put something where this tweezer move was. Look at how often it got respected after that, like turn around, turn around, turn around. That's a good spot to look for a dip, to take a long trade here. And then let's look over here, because I'm looking at this going, hey, we're right at the top to go down. It respected it. How many times did that happen back here? Kind of the same area, like right here. So that area is a channel, right? So you got 214.23 to 214.43. That's a 20-cent channel. Not a lot of risk, right? And then when you're trading this strategy, I always say go in only 25% of your position. And then let's just say this is a different level. I mean, this is like a flat top breakout here. Look how many times it hit and then it broke out. So that level might get respected up here. And this could be if you're going short and it was going against you, right? This might be where you add in half, or you say the rest of your position had to half, or you just say, look, if it broke that level too, it's time to get out. So you have backup levels that help you decide, but look at how that respected that. And it's just coming down. So you could have taken that move already. Say you got in here, 214.42, and it went all the way down to 214.34. So if you had 200 shares, you had a quick $20 trade right here, and most likely your indicators were calling it out as well. You can see here, the Scalp Pro said, you're going down. Now we're on the next candle, going up. So, you just use all of the things. Your target's only 3 or 4 cents, so this market's moving so slow. But let me break in a little deeper and show you how we did today. I'll show you when I took these actual trades, and that should help you determine, although we weren't channel trading too much today, but I hope this was somewhat informative. All these things have links on my channels, guys. So let's go into what happened today. Okay, guys, so this is a still picture of me just about to open at the market here, and I'm opening on NVIDIA, and I'm going to turn off the sound on this, and I'm just going to talk over live now. So the picture you're seeing is me live. Under me is the picture of when I actually traded. Ta-da, doppelganger. I actually do this a lot. Sometimes I cannot tell a lie. I will come in later and call trades I didn't even do for somebody else, but because the point is a teaching tool, right? It's a teaching tool. So And I don't do many like that, but sometimes they're action that somebody else actually traded. I cannot tell. It happens. It happens from time to time. But anyway, so let me just start this right here, and we're going to see what we just did this morning. So I'll press play here. I've got the sound off, and I'll talk to you about my logic was I believe the market's going to go up, right? So it's just about to open. I'm looking for a dip and then to ride it up. And I may take a swing trade, or I may just get out. I'm on the fly. So it's starting to go down, but it didn't go down much. And I remember thinking, it's not going to go down. I should just get in. So I got in. You saw me get in real quick at 174.36 is my price. You can see this is what the market maker is going to give me, and it starts to go up, and I'm looking to take a profit. I didn't at first, and I thought, oh, I should have taken it, because then it went red again as it went back down. It's below my position, but the first candle, it's really hard to call any price action because there's preset market orders and they're just washing out, we call it. They're just washing out. So now because of the way it's moving, I'm going to sell the ask, and I clicked it right there and it picked up immediately. And what does that mean when I sell the ask? That means that over here I was being picked up on the highest price I could get when I sold the ask, and it picked me up for $60, right? Now I take another immediate trade here and I almost get into trouble. But remember, I'm long biased here. I'm thinking this is going to keep going up, right? So I'm thinking, do I wait for a dip, or do I get just keep going up? And that's what I'm struggling with right now. I'm certainly going to wait for the next candle. This is still the first 1 minute candle. I don't usually like to just get right back in on the same candle. But let's see what happens here. I can't actually remember. I'm talking to everybody saying what I'm thinking right now, like, is this thing even going to go up? Just ever come back down, or is it just going to go straight up? And there's the next candle. So now I'm watching closely because it's kind of just slowing down to nothing, which I didn't expect. I expected price way down or way up. And the fact that it slowed down like that, concerned me. So I'm speeding in. Is it my screen I'm thinking? But then it goes up and it hits that ATR. And I'm like, if it breaks that ATR, I should just get in this. It's just going to go. And it may never come back. So I've got a little FOMO hitting me here, thinking I'm going to miss the trade. Get in. So I got in market just to make sure I got in. And then it started to fall off immediately from my position. I mean, not all the way. But I want bigger money here. So even if it went up, I would probably be waiting a little bit for maybe a little bit, another $50 trade. But look what happened here. It got rid of all my profits and went down. So I think at the time I'm telling everybody, I'm totally prepared for this. I'm only a quarter of my position in 200 shares, and I'm looking to add. I'd like it to get down to 174 even, near the way it opened in the market, so I can go up to a full 400 shares. But I'm not going to rush that. I'd like to see it get down, show signs of it to turn around before I go into my full half position, not full position, full half position, which I rarely go beyond until I see good signs that it's worth the money to do it. Of course, I can be wrong. We'll take a look at the accuracy and the trades I took, the breakdown, when I get done with this recap real quick. So I'm not going to show the full length of every trade, obviously. But I mean, most trades are much quicker than what you're seeing here. So this video won't be that long. But, I'm hoping it's going to just shoot through here with power. But as the minutes tick by here, I'm talking about letting this stay and going to another stock, because I'm not concerned it's going to go down much. Like down to like 165 or something, and I'm suddenly down a couple thousand. No, I think it could go down maybe 200 or 300, but I think it's going to swing up for the day. So I'm just not concerned to let it run, which is one of the things I mentioned before I even took the trade. Could become a swing trade very quickly, meaning throughout the day or several days. Swinging it is not just a 10-second trade or a 1 minute trade. It's meaning let's wait for it to make its move, for it to realize what it wants to do, right? So I think about, hey, I get ready to get out here because it's about to pop. But it toys with me. So I think what happens here, actually, guys, is I think that I don't get out here. So let me fast forward here and see. So here I am a few minutes later, stuck in the same situation. At one point, this was down $157 red. I think that's the highest it got. I was not concerned. And there was a little of me going like, is this thing going to fade today and all this good news? There was a part of me was a little slightly concerned, but not the money-wise, no. And I think eventually it would come back. I'm not worried now about the August 1st announcement like I was before, so I'm not as worried holding a swing into these stocks. I don't think there's going to be the crash like there was another time. So I'm about to switch. I've been prepping the traders this morning. Like, look, I'm just going to ride this as a swing. I'll keep an eye on it as we switch. So I go over to AMD here in just a split second while I'm waiting for this to play out. And then we talk about AMD for a minute. So I'm over to AMD, and this is technically not the strategy. This is going straight up. This is not consolidating, right? This is not channel trading. These are the whole $1.5 levels. That's historical data there. Right above here, I had my eyes on a fib, and I'm thinking, I can chase this, and the fib is where I need to watch out. So I just put my share size. I think I maybe go back up to 200. Let's see. No, 100. So I lowered it to 100 because I'm worried about I even went to 50. I'm worried about channel trading on Tesla here. So I did look at AMD earlier. I thought I was on AMD still. I looked at AMD earlier, and I ended up not trading it, I think. Maybe I skipped too far ahead. I'll go back in a minute just to make sure. But so I go into Tesla, low share size, worried about anybody following me, making all kinds of warnings that, be careful here. I really don't know how to read Tesla. I know how to read it. It says it's going up. But you can't trust Tesla. Let me zoom up. So I'm back to take another trade on Tesla. And I tell you, I still have some apprehension, which I'm saying it does seem like it has news. Tesla has news down here, okay? So I'm thinking when Tesla has news, even when it's not good news, people just go crazy. So you can see over here on the 5-minute. So you are chasing something here, which could become a falling star at any second, and it could drop $10 in like 3 or 5 minutes. So that's a lot. That's $1,000. So, you need to be prepared to get out for a max loss. This is not one I would swing. And right now, it's not one I would short. Typically, I am short bias on this stock, but not when it has news right now. So let's see what happens. I'm buying the bid to get the best bid price because the spread keeps getting wider here. I'm looking for level 2 to swale here. I'm watching, particularly on this, you can see as the price is going up or down, up, as you see these swaling. Are there higher highs or lower lows? Which way is it swaling? When it goes up, does it have, more pennies going up than down? Clearly, the target says yes. This indicator really helps with that. So going long is the right direction here. But you can see what happened on this trade. So you have to be with 100 shares. You just have to go like, no big deal. This could do you $300. I shouldn't be concerned. That's the way you have to look at this when you trade Tesla. Like you have to have very low share size or very thick skin for losses. So again, there's no reason for me to think that this should reverse. If it's a normal stock, it should keep going up the way it's going up. But every time it does this, with a gravestone or a doji or a dragonfly, every time it shows a sign of not being as strong, you've got to watch out. So there's a dragonfly that's red. This is a sign of a reversal. You broke back through the even dollar amount there. Are you gonna break through this historical data too? I think I checked this data right here because I'm worried. How strong is that data? Is it that it's about to break through? Maybe I already did check it. So no, it looks like I'm about to check it. No, maybe not. Let's see. I can't remember every trade, guys. So let's talk it through here and see what happens. I'm trying to tell you my thought process. So I'm getting ready to get out. It's moving with speed, so it could give me a double-digit number to get out very quickly here. So I'm just looking to get out quick on the ask. Every time that it consolidates, I get more worried that it's going to drop off. Instead of being a breakout, it's going to be a breakdown, as you can see. Taking away the profit from my other NVIDIA, and it's looking to hurt me. So a little risky here with Tesla. I have the 9 moving average to hold it up. I'm talking about that. The even dollar right here. I think if it just blew right through these down all the way down to this level, I was talking about, I wasn't quite sure what that level was right there. But if it moved, because I looked, it's not an SMA. But anyway, so as it goes down, I'm trying to figure out where should I be worried that it's not going to recover, right? So I am starting to have those thoughts. But it doesn't really gain purchase with me because it doesn't. So I'm looking at that level right now, that 321.70. Like, where was that marked? Okay, so it's marked right there, and it does hit it a whole bunch of times as it goes across. It gets respected right there too. See, so I'm showing that got respected right there. So that makes me start to like this level. There it is again. So you don't want that to break that level going down. Because it doesn't have anything else to that fib. So had it kept going down off that level, I would have been more concerned. So we're waiting out the trade, starting to go back up. I'm feeling better now, like that was my entire plan, no problem. I knew this would happen exactly this way. Not. So nobody ever knows for real, right? But the more cumulative data that you get, the more you're hedging, so you can get a good trade, right? You're going to get more good trades than bad trades. You're going to make money, but you got to put in the work, the time, get the right tools, and then it becomes very, very easy. Well, that's a stupid statement. It becomes easier for you, is what I should say. Easier for you the more you learn, and I still have losses that I can't believe I had because I don't listen to myself and just say, get out, because I'm so convinced it's going to reverse. I just convinced myself. In some ways, being so accurate can really work against you for big losses because you just always feel they're going to recover. I have kind of an advantage. I kind of cheat because I can keep adding to my share size a lot. So I get my price closer and closer to where the actual price is by adding shares. My price point keeps getting closer to it by adding shares. I have a large enough account where I can do that. I can margin, well into the millions of dollars. So I can do crazy stuff, have, 3,000 shares of Tesla and just try to get the price down there and then have a little bump up and get out, right? So you can see where the synthetic icebergs are. So I know I'm going to get picked up. Little advantages like that for people that trade in mega. So if 99 times out of 100, I would never implement that type of strategy. But if I called it wrong and I dig a hole deeper and deeper and deeper to where it's like, oh my God, I'm going to lose 10K on this trade. I cannot let that happen. You're crazy. You get hijacked, right? So then I'll add to my position like bam, 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 triple. I might hit this 3, 4, 5 times until I see this price get right near this price, and then I look you see which way it's swelling. Then as it swells up, then you get out. You use market because if they're going to give you an alternate trading route, which they will do for me, large traders that trade large share size, they're going to guarantee I get filled with very little slippage. So I get out, and it's cheating almost, right? By having the more money, it's cheating. But I will cheat to win. I'll say it. And that's why I say to you guys, max loss, no matter what else. Get out at your max loss. Don't play the reindeer games I play, I often I get so angry because I want to go short, but I'll push buy. I'm just like, what was I thinking? And I start my trade out wrong. And then I just double down rather than just get out immediately. I can make this trade work for me. I knew the right direction, but I stupidly pushed the wrong button because I trade with hotkeys a lot. And, when you switch back and forth, it can get a little confusing. And I was just like, I'll make it work, and it's just stupid. You can't, just get out for a $50, $100, whatever it is, just get out right then, So I always say, do your own due diligence. Don't follow me, speak to a licensed financial advisor. You can look at me as one more trading tool and then make your strategy and your goals around one more guy, one more concept. You don't want to just stop with me. You want to learn from everything you can learn out there. Now Tesla's showing a sign of recovery. We've waited through the whole long trade as I've talked, but I had a lesson to teach upon you. So I think this is about to be a done trade, so we'll keep it rolling for now. MACD said it was going down. This buy-sell oscillator says it's going down. Remember, I always wait a couple of minutes. So after all that, you know, all that horrible pain, I got out for 25 bucks. This is where I say, like, don't get greedy. Just take the money. Now I went back to check on NVIDIA, which I had kept, and I'm just like, you know what? I'm just going to take my money here. I'm just going to take it now. So now that became 104. Now, I didn't even look here because I saw it going down in price, so I just didn't want to lose. Now I look, I'm glad I got out because it hit the ATR and started to turn around. So, you know, you look at the sellers here, look at the multi-chart alignment. I'm taking it all and going, hey, that was a good time to get out. Take your profit. It might break the ATR, and then you can get back in again, right? So now I'm checking other stocks. So let's see where I end up. So I headed back to AMD. I saw this consolidation after we left, and I was getting excited that it might be coming back down toward this channel. I'm not sure. Or this could be a new channel. It looks like I'm about to buy, which is surprising, but probably because I'm thinking this is going to hit down here, and I'm getting ready to buy. Let's see what happens. Now, I'm also looking at the level 2, and I can see right now that's not a bad place to buy. So it looked like it was going to keep going to me right there. Like I said, you're looking higher highs, lower lows. You're looking at this swale, I call it. But, you know, I would have been better off to wait to get in where the support and resistance levels are calling me to get in. So I'm totally ready to add to half share size right down here off this flat top that it broke out. So we call it a flat bottom. And it's banging off the 9 moving average and turning around. So it doesn't look like it's going to give me an advantage of adding to my share size, which would make me more money as it came back up, right? So I am saying to myself, well, I worked so hard for that measly amount of money, and I'm already down over here on this stupid little stock. That's not a little stock, but look at just straight up over here. So nothing telling you this is going to stop. Look at the multi-chart alignment, right? It's trending, right? So your small microcosm of 1 minute reds, you see how the volume dropped with the sellers? It's above the VWAP, the 14. This says it's going up. I have no worries here that this isn't going to recover, or very little, worries. I totally believe with the data that's on the screen, the target high is larger, almost double the target down. I mean, there's nothing that says this trade shouldn't be successful. For a while I was green there. I saw $13 hit here. It's the P&L. That's how many pennies that I've moved on this share size. So no fear here. Just a waiting game. You got to wait it out, and there it goes. So, yeah, when it got 18 toward 20 bucks, I'm looking for anything with a 2 in front of it. I think I said, like, we're looking for $20 plus, not get over greedy, just a $20 plus trade if we can get it. The longer it takes to get there, the more worried I am about just maybe I should take any profit, I'm waiting it out, resting on that even dollar, 174. Keeps breaking back through it, slightly concerning. It's got a tweezer move right before it, 2 tweezer moves. So it's just a... Oh, we had a little glitch there. So now we have now it's making money again as it goes up here. There you go. So that was enough. That was a decent trade there. Let's see what I do next. So I'm about to go back in AMD here based on that support down here. So now we're out of that channel I was talking about, but it seemed like this was making a channel here. So there's a new channel. So I'm channel trading on support and resistance, and I have a fail-safe down here if I need to add to 400 shares. Now you see the magnet working here. As that pulls above the magnet, that could pull it up. I think it already might have done that. I'm not sure. I wasn't watching. And that signifies that the price could go up. So although I got worried right here, the magnet action tells me. So it broke the 9, the 14, and the 20. It's like, hey, dude, Why are you going long right here? You're up 77 cents. You're 40 cents off your position, 200 shares. Should you add? Your green is gone over here. You had 30 bucks. It's gone now. And this one trade is down far. So it's a little, every trade is worrisome, you know. As I see the volume increase and it's passing the last candle, that's what that blue means. That's not a good sign for me to stay short. So I have to decide now, am I going to add to my position for the recovery? I start to look everywhere. Well, that's a big red candle. Is this going to retrace all the way to the open? It could, except I know that the market's really strong overall. Look down here. I know it's still trending up overall. I know that we're looking at a 1 minute chart and starting to get panicked. Now look what happens in a split second. Like we're right on the verge of everybody getting in to go long. So I tried to get out. You see me right there? 173.86. I see it swaling up, so I hold it. So it ended up being like an $18 trade. It was a decent trade. Let's see what I do next. So it looks like I'm about to get into Apple. It's hitting a flat top here. So I'm trying to decide, do I play it long, you know, or is it going to be a breakdown? Do I watch it break that flat top and get in long because it's so strong up? Or again, two reversal signs at a $0.50 level. Is that enough to stop it? I'm starting to look at everything going, no, it looks like it's going to break up, not down. Maybe I'll catch a dip on a break up. So I'm looking for a dip, I think, yeah, to ride a break up. So I got it 3 cents below the $0.50, just like right here, right? Thinking that, yeah, it's gonna toy with me, but everything says we're going up over here. Going up right here. Target's higher, going up. Everything says up except right here, real tight. So it has to break that, and it'll often bump an area, $0.50, whole dollar, 2, 3, 5, 10 times before it breaks. And then you watch for the volume to increase, to watch the breakout happen as it starts to go up. If you see this volume go higher than the last candle, it's a sure sign it's going to go up. So MACD sending it down, not something I want to see because that's fairly accurate. So we want this candle to close now, so we can go on to the next candle with it going the right direction. Still, overall, everything points to up. You got to just be patient. Don't panic. Wait for the move. I put another channel there just in case on a tweezer. You know, I'm preparing just in case. Just like Mark Douglas says, Trading in the Zone, I have a link to it. You cannot ever trust all the information you have can go against you. You have to be prepared for it to go against you at any moment and have a maximum loss per trade and a maximum loss per day. But you will see that if you get good at reading the indicators and marking out the data, you're going to succeed in a trade as far as the trade going your direction more often than not. The other battle is to succeed in the share size and getting out when you hit your max loss and not making one lose trade equal 10 winning trades, which is what everybody's guilty of, myself included. When you can control that and not get greedy, then you don't have to get greedy on the winning trades. Just get out. 10 cents, 15 cents. Don't get even 5 cents. If it moves that much, I don't mean 5 cents, that's what you make. Like if the price of the stock moved 5 cents and you have 500 shares, you have $25, just a quick pop, 5 cents, bam, you know. So now I'm feeling good about this. It's coming back. Will it break the level or should I just get out at the 50 cents? So I'm trying to decide that. And I'd rather wait for it to break the level. And I'm holding it a little longer for that to happen because I don't want to just make $3. But I'm also concerned that it's going to tap and break right back down. So I went out. I got $14. So not ideal. You know, I'd rather have had 20, but it wasn't too bad. So I'm about to kind of recap, and I know I missed a stock here when I did that. Well, let's see. So we have $14 on Apple, $104 on NVIDIA. So I'm adding those up. And then $49 on AMD. And then I don't know if I go to Tesla. I think I don't go to Tesla. And I didn't show that I had like almost $200. Instead, I think I showed that I only had $150. but I will show you on the actual money being made and the accuracy of the trades. So let's go ahead and switch over to that. So I'm just about to bring in where I keep track of everything on TraderView so we can go over this month and how we're doing. I just wanted to point out, like, this is where we started today. We were right there at the ATR. Remember when I took that first trade and got out at the ATR? So we're right back where I was getting out, right? And then it came back and tested it again. This is what large caps do. They retrace. So if you can just hold your breath and not panic, most of the time they will come back to your position. Now, figuring out which way the market goes biased based on the different indicators and news and things like that is helpful. That I thought this might go to 176, maybe even 178 before the close of day. That's still entirely possible. So a lot of people are very late to jump on the bandwagon, and or late to take their profit, and then new traders come in. But let's go ahead and get over to see how we are doing here. So this is a count just for day trading for success. I'm using just this specific count on this month. Our goal is $100 average per day. So right now we have 3, 8, 13, 18, 19 trading days. So really anything over $1,900 is successful. Okay. Now this day I was off, but then I came back and I traded after you guys. So you didn't get to see me make that small amount with Charlie, but that was on Friday. And then I came back today and made another $130 or $40 with Charlie after I did the RV strategy. She was not over her goal, so we did a little bit more to do that. So you guys, I know a lot of you just keep trading throughout the day and have incredible numbers, the email that I'm getting, even into the thousands of dollars. But remember, our goal is just $100. So when you add that to the end of the month, and when you get to we might make $4K, right, for the month. So that's a really nice house and car payment. Or, maybe it's not enough to have you quit your job, or maybe it is. That's bring home, like $800 a week, after taxes, depending on your tax, what kind of taxes you have. But I mean, I don't know. I'm not even going to get down there. But yeah, it's a hedge to make the beginning of making a really good living if you're doing this well. And remember your max loss, just always keeping track of that, guys. So I hope this was informative. Don't forget to check out all the links under the show, more information. Thanks for watching. Don't forget to set your alerts so you can trade with me every morning. I can't wait to see you there. So always stay inquisitive, guys. Be careful out there and go green.